Hi, good morning, everyone. So welcome to our daily briefing. So today is November 10th, which is Wednesday. So let us start our briefing by take a quick recap on previous important economic data. So the first one is Germany ZEW Economic Sentiment Index November. So previous is 22.3, forecast is at 20, but the actual is 31.7. So this is a lot higher than the forecast and also previous. So this is actually a good news for the euro dollar. Okay, then we go to the next one, which is the US PPI month October. So previous is 0.5%, the forecast is 0.6%, and the actual is same as the forecast at 0.6%. So this doesn't really bring big impact to the market last night. So we go to the next part of our daily briefing today, which is the previous day market volatility recap on WTI crude oil. So it rise 260 pips yesterday. So what happened on WTI crude oil market? So let's take a look on the factor here. So US oil rose more than 3% in late trading to close at $84.57 per barrel, the highest level in nearly 2 weeks. So because of a US energy report predicted that the crude oil supply would increase next year, leading the market to speculate that the Biden administration may shelve the release of the country's crude oil emergency reserve plans. So this is the reason why the WTI crude oil rise like yesterday. Okay, then we go to the next part of our daily briefing today, which is in EU session today. We have to focus on this important economic data. So let's take a look on this. So Germany inflation rate year-on-year final October. So previous is 4.5%. Same as the forecast is at 4.5%. So this important economic data is going to release at 3 o'clock later. So if higher than expected reading should be taken as positive for the euro dollar, while a lower than expected reading should be taken as negative for the euro dollar. And then in US session tonight, okay, we have a lot important economic data we have to focus. So especially this one, US inflation rate year-on-year October. So this important economic data will bring big impact to the market because the market has big volatility tonight. Okay, so let us take a look on the first one, which is the US core inflation rate year-on-year October. So the previous is 4%, the forecast is 4.3%. And it is going to release at 9:30 tonight. So if higher than expected reading should be taken as positive for the USD, while a lower than expected reading should be taken as negative for the USD. So the next one, which is the US inflation rate year-on-year, the previous one is core and this one is inflation rate year-on-year. So October, so previous is 5.4% and this one is 5.4, forecast is 5.8%. And this important economic data is going to release at 9:30 tonight too. So if higher than expected reading should be taken as positive for the USD, while a lower than expected reading should be taken as negative for the USD. Okay, so the next one, which is the US initial jobless claims, 6 November. So previous is 269,000. The forecast is as 265,000. And the schedule is same at 9:30 tonight. So if higher than expected reading should be taken as negative for the USD, while a lower than expected reading should be taken as positive for the USD. Okay, then we go to the last one, the last important economic data today, which is the US EIA crude oil stocks change 5th November. So previous is 3.291 million and the forecast is at 1.9 million. And this important economic data is going to release at 11:30 tonight. So if the increase in crude inventories is more than expected, so it implies weaker demand and is bearish for crude prices. In other scenario, so it's less than expected, it implies greater demand and is bullish for crude prices. Okay, so we go to the last part of our daily briefing today, which is the market update for gold. So for the resistance level of today is 1836, same as yesterday. So the support level of today is 1818. My personal opinion for today, I will still take it as bullish, same as Monday and also same as yesterday, bullish and bullish, bullish again. So why? So what happened? Why I will still take it and bullish? So let's read the factors here. So on Tuesday, November 9, which is yesterday, the price of gold ushered in 4 consecutive rises, mainly because of the weak trend and the US dollar and US stocks supported the price of gold. So in addition, the high PPI index also kept inflation expectations high, leading to the favor of anti-inflationary gold. Okay, so but Brett's hawkish speech limits the rise in gold prices yesterday. Okay, so the price of gold is currently rising well, but it has encountered an important resistance of at 1836. So it is necessary to pay attention to the gains and losses of this level today in the day. Okay, so focus on the US CPI and the number of initial jobless claims in the day. So it is currently expected that the CPI will continue to rise, which may be bullish for gold prices. Okay, so if it is weaker than expected, it may be bearish for gold prices. But based on my opinion, even it is weaker than expected, if it's still higher than 5.4%, which is, I mean, if the actual come out 5.7%, but it's still higher than the 5.4%, I mean, this is still good for the gold prices. I will still take it as a bullish, even it is weaker than expected. Okay, so that's all for our briefing today. So wish you have a good day and see you again. So bye bye.